Last week we had an institutional traders panel. This week we're going to shift the focus a bit towards retail traders. So, we had Grant on last week talking from his background in institutional trading. When Grant trades right now, he's trading his own account, so he's technically a retail trader.
That is
when
true.
He trades, right? Yeah. So he's no longer an institutional trader.
Yeah.
Currently, he's a retail trader. I have our guest tonight is Bitman. So I've been following Bitman recently, and I remember last time I was telling you guys about what makes a lot of traders lose in this space is a lot of bad actors that tell you trading is easy or tell you they always win. What I liked about Bitman's profile was I could see his losses. They're there. All traders do is just knowing about when to quit and when to switch bias and go long or go short. I'll just let the panel introduce themselves first. We're going to talk a bit about trading strategies. We're going to chat a bit about Bitcoin, and we're going to spend the last 30 minutes talking about moonbag coins. So, Grant, if you want to intro yourself.
Sounds good, mate. Thank you very much. I'm Grant Coltham, CEO of Mind Digital. Australia's probably newest exchange. There might have been one after us, but not quite sure. So, guys, we've now developed out our US dollar book, Australian dollar book. We've also just about to add Bitcoin NZD, which is pretty exciting. And then the main other major feature we've got, which will be the first exchange in Australia to do so, we're also going to unveil name pending Mine Vault out there. And so essentially what users will be able to do is stake their Bitcoin, Ethereum and USDT and receive interest on that. And that's in a fully insured wallet. So users don't really have to, in a frozen wallet, so they don't have to really be concerned over that being hacked whilst in storage and receiving interest. We can do it either in the native crypto, which is our preference, but also if users want to receive it in fiat, we can come to some agreements there.
Interesting. That I know I'm excited about those products. We can look more into them. Bitman, do you want to give us a little intro about yourself?
Thanks, Omar. Definitely. So I've been a trader for 6 years, and I entered crypto 3 years ago in 2017. For a few months, it was great. It was, moon days, and I didn't even have to trade. I had the mentality that I'll be able to buy a Lamborghini next year, like everybody else did. Just buy and hold. And the biggest shock for me as a crypto trader came in the 2018 market crash, and it was brutal. I think it was brutal for almost everyone. And but the market volatility made me kind of fall in love with Bitcoin and altcoins. And it was a lot faster than stocks, so it was kind of a dream come true for me. And stocks have fundamental factors that you have to look into, but for me, Bitcoin was largely dominated by technical analysis, and that was perfect. So even coins like that have mainnet launches and Binance listings, even fundamental news could be traded as long as you stayed ahead of the crowd. So I started to notice what crypto Twitter was doing a few months ago, and I felt that a lot of people there were analysts, not really trading, but simply posting stuff. If you post about 5 coins and one of them goes up, you retweet the one coin and forget about the other 4. And I thought that there was a lack of transparency in this space, and if I started helping some people, if I just started posting some tweets, maybe it could help people. So in 4 months, I got around 7,000 followers, and I love every single one of them. So now I'm a crypto Twitter trader.
No, it is definitely it is a very interesting point. It is something I highlighted a lot last week is misinformation in this space is the reason why most retail traders end up messing up. Good example, I said posting 4 coins and then one of them randomly pops and like, yeah, I called it. Also interesting to point out the catastrophic drop after 2017. I'm sure that screwed over a lot of people, but I guess if you were trading at that time and you were aware of the market, you could have made a lot of money on that volatility, on shorting that top. Not sure if I know any people who've done that, but yeah. Okay, so where do we want to start this? How do we start talking about retail trading? I mean, I think something I really want to talk about is the most common things retail traders end up messing up and what causes most of them to mess up. I mean, any thoughts on that, Grant? Any Bitman?
Yeah,
Any?
I think the main thing is that for most people when you start, it's very hard to understand how much you should be trading, how much you should be risking, how to know when you think you're really right versus maybe right versus not no idea. They're probably the three factors. Probably knowing the amount to trade is probably the most mechanical factor you can work through, and it's probably one of the main factors that people get initially. That's probably the first thing they figure out. But the knowing when to trade is difficult because it's not just about the external signals in the market. It's also knowing about yourself. You're tired, you're stressed, you're happy, etc. And then knowing how much to risk, I think, becomes the ultimate factor. Because at the end of the day, even if you have the right trade, if you don't know exactly the right amount to risk, you might not be able to still run it to fruition. So that's where ultimately I think a lot of traders end up focusing on. And I think basically though one of the main issues, they just tend to focus on trying to be too right. Which is a big issue. Some people think you need to, if you don't get every trade right, well, how can you make money? So
Yeah.
I think I completely agree with Grant on risk management. I remember I got a DM a couple of days ago on Twitter, and the guy saw my trading log and said, if I put all my money into every single trade of yours, I would be up 6x in 1 month. And I said,
yeah.
sorry, but that's not how it works. You don't put all your money into one trade. And even if I did that, I'm pretty sure I'll be too emotional and mess things up because you're risking way too much money. But other than risk management, I think what people really lack as traders is patience. And it's a quality that takes time and experience to develop. I have had so many experiences where I would cut the trade too early, or when a coin is starting to sweep the lows before it finally goes up, my stop loss is too tight and it just gets hit. And at that point, the coin starts mooning and it's too late. So just kind of learning from these mistakes. And when you don't see a trade, you just don't take a trade. I think one important realization I had was that the harder you work doesn't necessarily lead to more profits. There is that optimal sort of productivity zone, how much you should be checking the screen every single day. It doesn't have to be 12 hours. I only check the screen for about 3 to 4 hours a day. And as a swing trader, that's kind of optimal for me. So, it's more about smart work. It's more about having your limit orders, your stop loss already there, not really market buying and staying patient. If the trade comes to you, you take it, but you don't run behind it. And, that's an important realization. And I think patience is the key.
Yeah, that's very true. I'm guilty of being impatient with trades, market buy, market sell. But it definitely, most of the time, it leads to you. I mean, discipline is very important to be a good trader. That's
Yeah, I mean, because especially as you said, Omar, the thing on that type of scenario where we're all guilty of that really hurts the trade is say you get FOMO and you market buy, say $30 above. We're talking about Bitcoin, right? $30 above your limit price.
Yeah.
Now, if you're right, okay, you're right. Well, okay, so be it. But if you're wrong, well, then either you've got to then say, well, you've got to extend your stop by $30 to put it in the likely spot where it should be. Or if you don't do that and you want to keep the stop a fixed size, well, then you've just now put the stop in the middle of nowhere, and the likelihood of it's getting triggered is a lot higher because you now don't have any confidence of, is that a good place where you've put the stop or not? So it sort of has like a double-edged impact. You open it for the possibility of either losing more if you keep a fixed stop price, or if you use a fixed stop quantity, you end up raising the probability of getting stopped out.
Yeah, if we just take a very simple example, like let's say something's at $10 and your target, okay, you want to enter at $10, your target is $13, and let's say the optimal sort of stop loss is at $9 because that's where support is, or let's just say based on technical analysis, that's the trade you want. If the market price is 11 right now and you kind of market buy into a suboptimal entry, now your risk to reward ratio is completely sort of damaged, and your stop loss should still be $9 because based on the charts that's optimal, and your target is still $13, but you kind of sacrificed your entry, and that opens you up to so much more risk. I have to explain this to my members, to a lot of guys, almost every single day, that entry is almost the most important thing in a trade. And if we talk about a recent moonbag, it was XVG.
Yeah.
So that was a funny story, right? I wanted to enter XVG on the Bitcoin pair. I wanted to enter at 37 sats, and it fell to 38 sats, but it never fell to 37, and now it's over 100. In a couple of weeks. But and I got DMs from members, hey, we kind of missed it, can we enter now at 50, can we enter at 60? And I was like, look, there's so many more opportunities out there, why don't we just leave it and focus on the next coin that might pump? So for me, just developing that patience not to FOMO in, no matter just having my entry level there, because my downside is limited. I know where my stop loss is going to be, no matter where I enter. So just after 38, I just never got my entry, and I never entered XVG. And it happens. Missed opportunities are a part of trading, but I am pretty rigid when it comes to my entries, and it helps me out over the long run.
Yeah, that's another very interesting point that you pointed out, is the fact that when you miss a trade, it doesn't mean it's not the end of the world. There's another one.
Yeah.
You don't need to FOMO.
Right?
There's another one.
You just kept the same amount of capital.
Yeah.
It's not like you got punished for the missed trade. It's not like then you had to pay the cost or something. You just you just stay the same for a day.
I think it's something people forget, that is just as important to protect your capital as it is to be in a trade. You have a duty to protect that capital that you're trading. Yes, XVG pumped, but it pumped. There's another pump after it. It doesn't mean because we missed this 3x. It's thousands of coins out there, and if we go into moon season, most of them are going to do similar moves. It doesn't mean you missed this one. That's it. It's game over. Let's try and FOMO into the top. I had that experience with VET recently, VChain.
Yep.
I got in at about 40 cents, got out at about 100 sats, and then I saw it going to 110 sats. I'm like, okay, I've made like nearly 3x. So I'm happy with my return. I just got out of it. But I kept staring at the chart, and it kept going towards 110. I'm like, okay, shit, it might go to 150. Should I FOMO back in? I was this close to FOMOing back in before it just dumped.
Yeah.
I was about to click the button. Like, seriously, I was about to click it. That's it. And it just dumped. And I'm like, that would have been the dumbest mistake. I would have wiped out all my profits that I waited months for.
Yeah,
exactly.
I actually had a much... I entered VET at 49. I just left at 61. I didn't really enter again because that was my target. And then I remember tweets about it as well, that it was at 78, it was at 80, and should we enter again? It's going to 100 sats and stuff like that. I just kind of move on. I try to avoid that FOMO temptation because, even if you only made 30% profits when you could have made maybe 200 or 300%, that's fine. Just move on. It was a good trade. Any profit is good profit, and just kind of move on to the next setup that you see. There's so many setups out there. You don't need to run behind a coin.
Yeah, and I think it's actually also good advice on that aspect as well. Like, how do you, different people do it different ways, but how then do you actually move on from it? Like, for me, sometimes I'll find it'll be just, if you've got a watch list, you delete the coin off the watch list. Just so you're not sitting there being reminded over what the trade should have been.
Yeah, I think it's another important thing as well that I learned about trading, is the fact that, as you just said, Bitman, you need to know what your target is. The way I look at it is that okay, I'm taking a trade right now. This is my stop loss. This is my target. If I win, I'm going to make 30%. If I lose, I get stopped out. I lose 5%. This is a trade. I can do this 5 times. 2 of them will lose. 3 of them will win. I'm up. But if I'm just entering positions without determining these things before I enter a trade, then I just consider it gambling. You're just flipping a coin. You're just like, here,
I
okay, I'm
agree.
gonna mark. Yeah, I'm gonna mark it by it goes up, I win. It goes down, I lose. And that's literally flipping a coin. You might as well play dice.
Yeah, I think that is the problem. And I remember, and I know this because I used to do the same thing. I mean, all of us had that mentality. I had that mentality in 2017. Just buy it at any price and hold it, and it's going to go up eventually. And it was so wrong. Yeah, I think if you have the numbers with you, if you can look at the charts, you can identify the support, resistance, demand and supply levels. It all becomes automatic. You just feed it into your exchange and leave it. Either you get stopped out or you hit target at the end of the day. After a trade is finished, you don't need to look at it anymore. But if somebody doesn't have a target, doesn't have a stop loss, even if it falls 20%, they're hopeful that it's going to rise back up and they don't want to sell. If it goes up, they're greedy and they want to sell it at a higher price. At that point, you look at CT and, crypto Twitter, there's so many analysts saying this one's going to 3x like tomorrow. Oh, this one's going to go up 50% in the next 24 hours. And it gets you because that rarely actually happens.
Yeah.
Yeah.
Yeah, it's such a good point, though, as you said. Like, it rarely, it isn't. Yeah, I think it's really interesting when you do that as a trader, where you then have to like architect a very specific narrative over a very specific order of events for the trade to work. It's sort of like one of those things when you start to get to know when you probably put the wrong trade on. If you're ever having those, you have to have a conversation with yourself where 12 things need to line up for the trade to work. It's like probably more than 10 is probably an issue.
Yeah.
So, I mean, trading indicators, anything specific you like, Bitman? Anything you use specifically? Any indicators you prefer?
So I've had my fair shot at, whatever I could find and learn, but at the end, I feel like keeping it simple is what I like whenever I'm looking at charts. So I have diversified my holdings into two wallets, and one of them is for investing, one of them is for trading. Investing is longer term, and trading is setups that I take for a day to 3 or 4 days. And so whenever I'm analyzing stuff, I first turn off every single indicator, not looking at any indicator and simply looking at the price itself. And that's the strongest kind of analysis you can do because ultimately indicators are some sort of formulations of the price themselves. And they do tell you stuff, but at the end of the day, they're called indicators for a reason. And if you can analyze price, that's the best thing you can do. After that, I like to turn on moving averages. I like to look at the RSI. Just very basic indicators that almost everyone knows, but it's not about the indicator itself. It's about how you interpret it and, from your experience, how you trade it, how patient you can be. I think TA is not that difficult. I can teach somebody technical analysis in a week, and they'll be just as good as I am. But when it comes to taking a trade, it's more about your mind. It's more about your emotions. That really screws people over, and that's why no matter how hard some people are trying throughout their lifetimes, they're just not profitable because they couldn't get that mindset and that sort of a plan that I have to set my entry, I have to set my stop loss, I have to set my target every single time. So it's more about that mentality than the TA itself.
Yeah, I think again I think it's a very good answer, and I'm the same as Bitman. The most things I'd use as a guess if called indicator would be the same again, moving averages. Mostly everything else I do would be horizontal, support, resistance lines, and some non-horizontal trend lines. But yeah, I think exactly right as Bitman said though. It's about trading to the plan, and I think the other thing is also where you can get people, especially if you get too indicator focused at the start, is that you can often then it's not you that, or it's not that you've got to look at your trading that's the issue. It's like you need to just define the right specification for the indicator and everything will work. And so then the very much the goal becomes, to iterate as many indicators as you can try as possible versus actually developing out trading skill, which is why I think there'd be oftentimes you'll find people who may have been very indicator focused and they can sort of maybe go for a year or 2 years and but ultimately they get frustrated they're not getting results, but they're not getting results because they haven't really improved their trading skill over that period of time. They've learned more about indicators, but they haven't improved as a trader.
Okay, it's interesting. Risking capital. How much should you be risking per trade?
Grant, you go ahead first.
Sorry, mate. Well, it really comes down to is what you think the reward is and what you think a fair, guess of the probability is. I think there will be occasions, maybe less in crypto, but definitely in traditional markets where there's, significant fundamental news where you would feel confident that the move hasn't really started that much yet, that you'd bet extremely large trade sizes, so 50% of your limits or something like that. But on a day-to-day, it's got to do with whatever you think, you might be able to make out of it, what the probability of the trade's going wrong. And, you don't have to have that quantified down to the exact number. But again, if you've been trading for a while, you should have a fair idea of what your hit rate looks like and therefore what your, bet size should or could be.
I agree with them. And for me, what I like to do is I like to keep, for example, if I have my trading wallet and I want to trade a small altcoin, I would put about 5% of my capital into that trade. And if I make 20% profits, so I gained 1% overall on that trade. If I lose 5%, that's where my stop loss is. So I've lost 0.25% of my trading account on that trade. And I like to keep it around 5%. For me, that kind of works optimally because I'm not using a lot of leverage, especially for smaller coins. I kind of use no leverage. So I do rely on 10 to 20% swings. And if it's an alt season, I rely on maybe 20 to 50% swings. And once again, like I would stress the importance of having two wallets, an investing wallet and a trading wallet, because it has helped me change my mindset so much. I am not afraid. I don't get that feeling of FOMO anymore because I know that I have coins which I'm holding for the long run. I have coins like Engine, which I really like. I like the Chili's token as well because, both these coins are from the gaming industry, which I think has potential. And I think my Engine coin is up 100% and I still haven't sold it. If it was in my trading wallet, I would be itching to sell it at 20 or 30% profits. But you kind of know why you're holding a coin, depending on which wallet it's in. And it really helps me separate my mindset. Look at the weekly charts as well. Look at the daily charts as well. At the end, come down to the 4-hour charts and find my swing trades, which I want to take in my trading wallet. So it's really helped me, focus on the long term when I have to and focus on the short term when I have to. So everyone that's listening, I would say have two wallets for sure.
That's actually very, very true. I experienced something similar and very, very recently, to be honest. As soon as I set up two different accounts, my strategy changed. I was aware that this second account is literally only for trading. So I would use it only for trading. Its purpose is short-term trades. And I'm comfortable with my long-term holding positions because they're there. Leave them till moon season. It's fine.
Yeah, perfect.
Bitcoin. What are our thoughts on Bitcoin right now?
Well, maybe still making the Batman. Quite honestly, to be serious, it's double top, the 9,600. There was some rough support. I was resistance around there previously. It's technically formed lower lows, but it's still formed equally high highs. So can't call it a trend break. But to me, the compression of volatility is my biggest concern. So I don't. I want to be short, but very small and with a tight stop. But yeah, I can't be long at the moment.
Yeah, Bitman. Okay, what are your thoughts on Bitcoin?
Yeah, definitely. This is not a trading month for me. In terms of trading, it's been like I told you before we started, it's been below average. I
Yeah,
think April and May were so much better for trading because you had the first half where Bitcoin was making moves, and the second half of the month it was altcoins making moves and Bitcoin was relaxing. It was kind of perfect to have the best of both worlds. But right now, Bitcoin's been just moving 300 to 400 bucks a day on average, and it's not the kind of volatility that I like. I want a lot more. So I have been mostly focusing on my investments. When we had I think my very first tweet on Twitter was that Bitcoin's going from 10K to 8.5K, and that was in Feb. At that point, I sold plenty of my investment holdings, and right now, just last week, I had another tweet that I'm going to sell half my Bitcoin from my investment wallet because we are hitting 10.5K once again. And if we get over 10.5K, I'll buy back, and that's completely fine. I don't mind sacrificing a few $100, uh, just if I can call out a potential top. So the same thing with Ethereum. I thought 240 to 245 was my optimal selling range, and I'm still holding. Yeah, I still have half of my Bitcoin, and I'm just kind of wondering what's going to happen here. We have hit 10.5K 3 times now, but until now we have not made a higher high in 2.5 years. And until we do that, we haven't started a new cycle. It's still a consolidation period with higher lows and lower highs. So if I want to buy back the Bitcoin that I sold, I would do it around 8.5K to 9K. I would buy back a little bit there, and I would buy back a little bit at 8K. So on the recent dip, only one of my orders filled because we dipped right below 9K, but we didn't go that low, and most of my orders were 8.4 to 8.8K, but we only fell to 8.9K. Um, yeah, but I got the dip on Tezos and a couple of other coins. Maybe we can talk about them later. Yeah, that's my take for now.
No, yeah, but that take in itself as well is another interesting fact that people don't know. Is sometimes it's just a no trade zone. Sometimes you need to know that you're not meant to be. You are. I mean, we talked about this right before the show. And we said Bitcoin right now is just. We know it's going to do a massive move, but there's no way to actually. If you say it's going up or down, you're literally guessing. And you want to gamble, it's fine. You can flip a coin, but it's not really a smart trade to take because there's no clear break up or down yet. As you said, Grant, I mean, a small short might make sense, but there's no clear. I mean, I don't know. Uh,
and it's going to be interesting because it's unlikely, I think, to be like the which has been reminiscent of the bear market is oftentimes where the move started then in alts and then took Bitcoin with it. I think this time, we're going to see the move will come out of Bitcoin first and it'll probably take the alts with it, which is, interesting to keep your eye on.
Yeah,
yeah,
just to add to that, I think Bitcoin will probably outperform altcoins, and it might appear Bitcoin goes up, but that's not what that means, right? It just means that if the market falls, the alts will fall more than Bitcoin, and if the market goes up, I think that Bitcoin will go up faster than altcoins, and that's just purely looking at Bitcoin dominance. I love using Bitcoin dominance. It kind of helps me predict a lot of these mini cycles between Bitcoin and altcoins, and for the past 12 to 15 days it's been just sitting alongside support, not doing
Yep.
anything. And that kind of lack of volatility is what I'm talking about. I wanted to move up or down, kind of do something so that I can get more excited about either trading Bitcoin or trade altcoins. But right now it's just sitting at support. So I'm still waiting for a rise in Bitcoin dominance.
okay, that's um, just looking at the chart over here. Uh, Okay, so I mean, yeah, Bitcoin's in all trade zone. Let's leave that. Alts, what have you? I mean, you mentioned Tezos. You're looking at that. I've been holding Tezos for a while. I think it's pretty interesting. It's sitting in my investment bag, not trading though. I'm not actively trading it at the moment. Uh, I mean, the problem with Bitcoin being at the Bitcoin dominance being at support is if it breaks out, it messes up all the alt setups.
Yeah.
Yeah.
That's what I find tricky about this entire situation is that any massive move in Bitcoin messes up alt, and that's where what's going to happen is we might get a massive move in Bitcoin that'll mess up any alt trades you look at. Um,
I think the other interesting thing is it's also that's happening in these a lot of these moves in the alts is it's not necessarily like the two we talked about at the start of the show. They're not necessarily new coins either. It is showing, I think, back to people that you have to still take notice of the older coins that have been listed for a while because there can be still really valuable pumps in if it's not something that's got to be listed and get pumped off the listing date.
no, it's very true. Both of them, XVG and VChain, are very, very old coins. I mean, and they've been doing nothing for a long time. They're just going straight line.
Or like OMG is another example, right?
OMG, yeah.
Again, done not like if you pretty much bought it anywhere, in 2018 you're down like 90%. But if you hadn't, if you didn't, and then all of a sudden like your indicators or the trade setup look good, well then you've got also like psychologically there's no reason for you not to take the trade because you're not a person down 90%. You're just a fresh person looking at it and going, oh, it seems like there's some good news. They announced the integration with Tether and with Bitfinex, and they're doing a rebranding because they're pursuing slightly different model. All of a sudden, that story's not a bad story if you're looking at it, with clean slate. So, yeah.
I think that's another thing that people fall down the hole of is reminiscing on losses. I mean, what you said about if I was holding a bag of OMG, I'd look at it and be like, shit, I'm down. I need it to 10x for me to get my money back.
Yeah.
And I won't be able to see the trade setup because I'll be too psychologically attached to the fact that I'm down 90%. But a new trader will look at it and be like, hey, this can 3x from you. He doesn't need the 10x. He just needs the 3x.
Yeah.
I mean, that goes back.
For a hodler that's 90% down, his psychology is kind of skewed because he needs that kind of 1000% pump to even get to break even, right? But at something like 3x is amazing for somebody who's new to the coin.
Yeah, and I guess that all links back to your main point, Bitman, earlier, is that your psychology mentality as a trader is very, very important. You need to be able to control your emotions, not think that way, understand that, okay, I lost last trade, done, forget it. On to the next one. You can't base your next trade on your last loss. It's just not how it works.
Yeah. But especially if it's like, as Bitman would say as well, like especially if it's a fast market, if the market's moving fast and it's volatile, if you're spending too much time on your loss is the worst thing you do because then you're missing all the opportunities to get it back. It's a bit more excusable to maybe you harp on a loss when there's not many trades going on, so it sort of feels maybe a bit more important. But when the market's moving, you should just take those losses with the attitude of going, well, there's going to be something else to trade very, very soon, and be in that mindset ready to keep going.
No, yeah, definitely. That's okay. Okay, other coins. Bitman, what other coins are you looking at the moment? What seems to be attracting interest to you? What
you mean from a trading point or an investment point of view?
Let's talk a bit about trading point of view for now.
Hey, sure. So I think that IoTeX Maybe a bit too late because it's already pumping, but yeah, I got into IoTeX, and I can just explain my rationale, right? Whenever I'm looking at trading an altcoin, to be honest, I'm not a fundamentalist, and I don't even know what the project is about and what it's doing and if it's going to succeed or not, because I just want my 20 to 30% pump and get out. So if you look at IoTeX on the 4-hour chart, um, you can see a clear demand zone, you can see support, horizontal support, and you can see diagonal resistance coming down. So I'm always just looking for some kind of a breakout, and I think that a couple of majors like Bitcoin Cash and Ethereum Classic want to break out as well. It's just that they've been lagging quite a lot, and when the move comes, it'll be pretty violent to the upside. So I think Bitcoin Cash has established a very nice support level at 0.0245 if you see that chart, and I think it has potential for upside, and it's a good trade because it's clear invalidation below the support level, and the upside's pretty big. Um, I think some other coins that I'm looking at, it's really hard, right? Because this is not the ideal time for trading altcoins. I am pretty risk averse at this point. I'm putting less capital into every trade because violent move in Bitcoin's just going to ruin everything. And as somebody running the Bitman family and trying to be transparent, I have to be open about every single trade. So if I have 5 altcoin trades open and Bitcoin makes a violent move, I got to report 5 losses, right? And that's not very nice. So so
Yeah.
I think FTT looks pretty good. Oh, yeah, I think FTT looks pretty good, to be honest. Couple setups I have open right now. Also, I have WRX, the WazirX coin, that I think can pump. Yeah, but other than that, I'm not taking a lot of trades. I'm kind of holding on to these 4 or 5 that I like. I'm also holding on to Matic at the moment. Uh, I got a 7 or 8% rally, but I still have 50% of my holding. I want to exit a little higher. So I have my strategy, and it works this way. I have around 3 to 4 price targets. At the first target, I would usually exit around 40%. At the second, I'll usually exit 30% and move my stop loss to break even for the remaining, and I leave the remaining for the third and fourth target, which is usually much higher. Uh, so so I think that's what I like right now from an investment sort of standpoint. I think that Tezos hit a very nice uh, support level, and this is at on the USDT chart. This is at $2.40. It's kind of perfect horizontal support from $2.40 to $2.60. So um, again, as a trade, it's clear invalidation. You can exit below the support level, and I think right now it's trading at 2.65. So that was kind of an instant 10% pump because I just had my limit order in, and I was kind of waiting for days, just for it to fall at this level. I think Ethereum, Tezos, Link kind of have the same chart pretty much because the market moves together. For Link, this support level is no. For Ethereum, this support level is around 218, and we also bounced off that for now. For Link, this support level is around it's around 3.8 and around 3.4, right? Dollars. So I had a lot more orders at $3.4, but we didn't hit that level. So I only filled up a couple at 3.8, and right now it's sitting at 4.07. So kind of makes for these instant knife catching trades, right? If you can kind of catch it, you'll be up 5 to 10% within an hour or two. And that's what I've been doing right now, but not a lot of coins, to be honest. And the ones I'm in, I'm still waiting for the pump. I think IOTEX just pumped yesterday, and I'm happy about that. So that's up around 27 or 30% from my entry. But yeah, that's pretty much it.
I think against USDT pairs is very interesting looking at the charts. I mean, I just looked at Link, Tezos, Ethereum, Bitcoin.
Yeah.
The charts are exactly the same.
Yeah,
well,
for sure.
I mean, Link's probably a little bit more up and down, but yeah, it looks very similar.
But yeah, especially against USDT, they look very, very similar to each other. So you can see the same bottoms, the same, it's kind of taking similar shapes. I have a question from Vishnu. He's asking, do your investment choices change with the quantity you have in your trading wallet? And do you think differently based on your trading wallet balance?
Okay, do I click answer live and then answer it?
Yeah, you can just answer. I clicked it. That's fine.
Okay, great. Yeah. So let's say you had $100 in trading. Let's say you had $100 in investing. At the end of the month, you're up 15% in your trading account. So now you have 115. I usually take half of those profits and put it into investing because deep down, I am still a believer in cryptocurrencies, and I think that once we make a higher high above 10.5K, we are going to break all-time high. And so in that way, I'm kind of stacking my holdings. And if you mean in terms of which coin and how much to hold, yeah, definitely my biggest holding is Bitcoin. After that, it's Link, and after that, it's Ethereum. I have very small bags of Chili's token, Engine Coin, Tezos. I also like Algo, DAG from a TA standpoint, that can go up in the next couple of months. So that's basically what I hold. If that answers your question.
Yeah, I think it's again really good advice. I think you as a from a trading point of view, you don't obviously want to always squirrel away every piece of capital you got, and you also you really want to come up with a good I guess as Bitman said, whether it's monthly or whether it's every 2 weeks you do a sweep, or whether maybe it's longer. But I think it's important to have a regular, idea around when you want to sweep profits, out of your trading account, because again, otherwise you can have, a spectacular run, but then if you go cold and you increase, bet size with that, you can actually very quickly trade back those losses. Those gains. So yeah, I think it is important, especially if it is something you're doing to generate income. That's the other thing that I think people need to be very cognizant on when you're splitting out between what you think is trading and investing. Investing is, okay, I've saved X amount of capital and I want to allocate it on a permanent basis, or very close to permanent basis, to these assets. And I'm going to buy them at levels and sell them at levels, and that's sort of all I'm going to do. Versus your trading account, if it's something you're trying to make an income off every month or 3 months, well, then it is important that you really keep track on those things, because that's how you're generating money. Whereas investing, you're, by concept, in my eyes, you're doing it as a passive way to improve the amount of capital you've
got. I think Grant, had a really interesting point there about income generation. If I just ask every single participant right now, this month, how much do you want to make from crypto? And 90% of the people don't have an answer, because deep down inside you don't actually think of crypto as an income generation source. You think of it as something that's fun and emotional, like a roller coaster ride. And that's what I used to have as well. And until you kind of get rid of that, until you start thinking of it as this boring way to make money, you can't really generate an income, because every single penny you earn, you're gonna put it back in, and at some point you lose it. And I've had this experience because I converted 0.1 Bitcoin to 1.7 Bitcoin on BitMEX, and on the 6th trade, I lost it all. And it happened in 2018, and it was funny. It's funny now, but at that point it was just sad of what I had done. So
that's actually that's a very interesting thing that you just said. It's same thing that the institutional panel last week said, was that when we think about trading, most people, when they think about trading, they fantasize about this amazing fun thing you're doing and this high roller life, and on a yacht sipping, thinking about Wolf of Wall Street. The reality is, trading is a very boring and tiresome thing. It's work. It's hard work. You need to sit there and think and plan and write, and it takes hours until you actually figure out what the trade is. And it's not what's displayed to us it's not displayed to us that way in the media.
Especially depends. I mean, it's going to sound funny, but it's where you live. Like, honestly, traders in Australia are probably the toughest traders in the world, because we trade basically on the worst time zone in existence. We've got to either be up super early or up super late.
Like I remember, when I used to go to uni, they used to go into Credit Suisse, all those investment banks. You'd see the guys walking in at 4 a.m., walking to their offices, because that's what trading is. That's what traders do. Yeah. Traders aren't sitting on yachts their whole life. That's not.
Yeah. But that's interesting. Movies, though. I still love those. I
mean, it inspires you to do something big with your trading career. But I think people forget how long it takes to become successful. They just see a successful trader and forget the 20 years that trader spent building his skills and learning how to trade and becoming successful. They just assume that one day you wake up successful. That's just how it happens.
Yeah, and especially after that, the Big Short kind of came out. Everybody's kind of a genius when it comes to predicting, the top of cycles and predicting pandemics. After COVID happened, you see all these tweets and everyone like, I knew it's going to happen. I kind of predicted it. And, that's always bullshit, because you didn't put that plan into action. But ever since the movie came out, even as a kid, I was kind of like, I want to predict the next housing crisis. I want to be that kind of hero. And, it's deep down, it's kind of in my mind, but you can't really, life is not the same. You have to look at the numbers a lot more. In movies, they kind of skip past all the hard work, but that's definitely out there. I still love the movies, though. I watch Billions. I watch.
Exactly. Great.
But it's also further. I mean, I think it's further intensified by people in this space that want to convince you that trading is easy. I mean, you see the ads on Instagram. 17-year-old kid put $1,000 and made $1 million next week, and you're like, wait, what do you mean? How did he do that? And you're like, okay, but why is this being advertised to me this way? And then you realize what's behind it is that there's people incentivized to just tell you bullshit. I mean, it's the same in every industry. I mean, try buy a used car. Chances are you're going to get ripped off. And that's. I mean, we talked about traditional markets. I have an interesting question here. Let's talk about Bitcoin and the U.S. stock market, S&P and Bitcoin. I know, Bitman, you've been tweeting about it lately. Grant, I'm going to drill you about it again. What are our thoughts?
Yeah, you go first, Bitman.
Oh, I think, I tweeted about it just yesterday after a long time, and I think that the S&P can make a new high this year. And I posted it right after we started S&P started falling again because of fear of a second wave of the coronavirus, right? So, I mean, during these times, I'm not trading stocks as much. I've been mostly trading crypto, because technical analysis kind of falls dead when, a big news sort of comes out. And if you want to really trade the markets, not just based on technical analysis, you got to keep up with the fundamental news. And that's the reason I love crypto so much. There's not that much fundamental news. But I mean, I have seen a lot of. I do see correlation in Bitcoin and the U.S. stock market. There's also correlation between Bitcoin and gold, and it's kind of true, right? When money flows out, when people want to be more. When people want to preserve their capital, they're not just going to take their capital out of stocks. They're also going to take their capital out of crypto, if they have any in it. But when people talk about unemployment, people losing their jobs, I think that's where this is wrong. Anyone who is making minimum wage and kind of lost their job did not have any crypto holdings in the first place. And I think crypto is not available to the masses, right? You gotta go on this thing called Binance, where you gotta make an exchange account. You gotta understand all the tickers, and a lot of people just don't know what it is still. So I wouldn't say that Bitcoin's gonna fall because of all the retail pulling out. I don't think that retail is gonna pull out. And on the other hand, the bullish case is the U.S. dollar. The money machines going. and so much printing nowadays, I do think that even if the real kind of value of Bitcoin is declining because of the crisis, I think that can be counteracted by the nominal, by the nominal value of Bitcoin in terms of the US dollars, because there's just so much printing going on. I said this at 5K, I said this at 6K, that no matter what anyone is saying, I'm holding Bitcoin and dollar cost averaging all the way until 10K because of the money printing that was going on back in April. So yeah, there's definitely a correlation, but most of it, if you're looking at the news, I think it's buzz, and I try to stay away from it. I think the charts by themselves are sufficient if you want to be a trader or an investor in cryptocurrencies, and I try not to react to the news that much. Yeah.
Grant?
Yeah, well, I absolutely agree. There's obviously some underlying correlation, which I think sort of Bitman touched on. I think I sort of think of separating into three. I think there's three factors that really affect the correlation. One is the general risk sentiment in the say just in the economy, in the broader market. Obviously, if it's good, it'll be good for Bitcoin and good for stocks. So there tends to be that upward drift from that point of view. Then I think where there's some interesting correlation comes is a crossover in the models. I think crypto has been and continues to be heavily. A lot of the heavy short-term trading is being done by quantitative market makers who are very big and very connected into the traditional market world. They're definitely also connected into the crypto world. So I think they use very similar algorithms to enforce, their short-term execution strategies, which I then think drives a Bitcoin stock correlation to a degree at the lower level. Then the third factor, which I think is probably, is what's obviously stung most crypto investors, is then when crypto gets, moved by certain cryptography, basically forces within crypto itself, and then it tends to run over everyone, because what it tends to do is it breaks the correlations as that move gets orchestrated. But then because it is a considered move or a considered, position, it then necessarily doesn't play out with the rest of the markets. So, we can get those cases like we had recently where we had that, the night when we hit 10.5 and it was a double top and it probably looked like a reasonable sell, but then at the same time, it, then just fell, like basically $1,700, which I don't think, even if you did get short, you would have covered your short and probably gone long and potentially been stopped out in that size move. So, that's the part in crypto I think that still gives people the most issue at the moment, is when, Bitcoin, but even alts obviously do it as well. It does those really, individual moves.
Yeah, I think that's quite interesting. I mean, the way I kind of analyze the whole correlation with S&P is that, I mean, again, back to institutions, we keep saying whenever the institutional investor is coming in, I'm personally convinced there's plenty of funds that hold a lot of Bitcoin. And to these people, Bitcoin is not, I mean, when Bitcoin first started, we said it's a safe haven asset. This is against a downturn of global economy. But the reality is most of the people that hold Bitcoin or trade Bitcoin treat it as a high risk, high reward asset. And when they see all other markets crashing, what are they going to do? You think, I mean, when you see the stock market crash, traditional investors are not going to be like, okay, I'm going to buy Bitcoin now. You're going to be like, no, sell all assets, just back to cash. And that's how most people think. And that's but that's also why I think eventually this correlation breaks. At some point, a lot of these people will be out, and it's just us, the people who believe in crypto, that are still in. And that will cause that break of narrative from the S&P and Bitcoin.
Well, I think also the other interesting one, which really I think caught a lot of people out, was in hindsight, what was the Libra move and then the Libra reversal, right? Is I remember when the Libra news came out, I think we held a Crypto Sydney catch-up, well, maybe a week after or something like that. And then obviously the market was going up, but nothing crazy. And then, within, 5 weeks, it was, we traded 14,000. and it was the second all-time, second highest high we've ever formed. I don't think anyone sort of appreciated how big that news was going to be, and then the news that it wasn't going to happen. I think that also really caught a lot of people by surprise, and sort of again has a real impact on the charts, because it's created this, sort of what Bitman's talking about. It's created like a bit of a vacuum. Then above 10.5, it's then all the way up to that, almost the other high of 14,000, the high before that. So. I think that's really still coming through the market in some ways as well, that impact of that move.
Yeah. Gold. Anyone trading gold? Do you trade gold, Bitman? Do you hold gold?
I haven't been trading gold. I just hold some silver, but it's mostly just a hedge. And I don't think I've been checking on stocks that much. I just have a pharmaceutical stock, which, I like the technicals of, and as well as the fundamentals. And I had some silver on me. I think the silver is still at break even, and the stock's up around 30 or 40%. But, I haven't been checking a lot when it comes to commodities. Maybe
Okay.
Grant has something about that.
No, I have two friends who have been very long gold, and they're, basically, again, sort of a bit sort of the story you said. It's from both a technical point of view, they felt they liked it, and the fundamental point of view. There was some quite clean trades from the pure technical point of view, but from a fundamental point of view, there's been quite a different story. I mean, there was, some, you as I said, you probably couldn't have justified to get in from a technical point of view, but there was certainly over the last, 4 or 5 weeks, there probably would have been reasons you could have convinced yourself to get in fundamentally. And those trades would have ended disastrously. You would have basically kept getting long on pullbacks, and they look like reasonable sized pullbacks. We're not talking about, pulling back 1%. We're talking about pullback 5-6%. You're trying to get in. And then lots of choppy action. After that, then it's sort of like crypto. It sort of challenged. It looked like it was going to go higher, and then it hasn't. So now the technical pitch is probably degrading pretty quickly now, and probably from me, I feel like the fundamental pitch has degraded even further because as Bitman said, we've got money pretty going, but at the moment, that seems to be everyone's chilled about that to a degree, like, on the impact of, investments like gold or Bitcoin that we would have thought, rallied significantly.
I personally hold gold. I've never actively traded gold. I just like holding gold. I buy more whenever I have extra cash. The only reason I started looking at charts recently was because of it going to a high. I kept trying to convince myself, when does it dump? Or should I get out? But then I'm like, okay, so it's a bit more complicated than just market sell. Especially when it's physical, especially if it's physical gold as well.
Well, that was the other thing, right? Was then that was and this is this is a really important story, and it really echoes the things I guess we've been speaking about tonight. So a lot of people got FOMO'd into gold, hearing the stories about the spot physical gold. It was so hard to get, and it was trading at huge premiums and blah, 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 and all that stuff. And from a FOMO fundamental point of view, that gets pretty hard to fight against, because you're being told that, the futures are here and the spot's here, and we get told, Trading 101 that it'll go towards the spot market because that's the settlement market and all that. And essentially, if you put the trade on when the compression was at its highest, you probably didn't do that well. It's been times where, the compression's been lower and they've moved better together. So it's been a hard trade. I mean, I congratulate people who've stayed in it, but it was a good trade early on, which has now gotten a very tricky trade.
Hey, Jake.
Hey, gentlemen. How are you all?
Good, mate. How are you?
Good. Always a pleasure to jump on and learn a bunch of stuff. This is just more of an interesting tidbit. Most people would be familiar with the artist Prince, very famous over multi-generations. Obviously, great songwriter, Grammy Hall of Famer, all of the rest. He had sort of subscribed to this idea of self-custody, pre-crypto and all of those things, but was sort of obsessed with gold. So he actually, when he died, apart from the rights to his music and everything else that his legacy would sort of leave to his family and his estate, they actually found 67 gold bars he actually kept inside of his ranch, and had a plan to actually sell out more of his assets in all of his other holdings to acquire more gold, and was planning to put it into a bunker in his property. So I always thought it was a really fascinating thing at the time of his death when they sort of released it. It was just sort of, waved over. But I was like, very smart guy, really into it. But like, he kind of was the ultimate hodler from back in the day. That's it.
I guess.
I mean, it's one of those things. Recently, I was talking to a guy, and it was like, you also find for yourself where you can really find your natural rhythm. Hodling to certain people is all that makes sense because, well, if you like it, you like it, and you should own it. If you don't like it, you don't like it, and you shouldn't own it. For me, very quickly just fell sort of into a natural style of favouring short-term trading, because to me it was like, yeah, I might like it, but if it went up 10% today and I think that was too much, well, why wouldn't I sell it and then try to rebuy it? And I can do that. And then I've been able to make that gap, and I've got a better price, and I can stay in it longer. And then I think as you do that more and more, you start pulling yourself away from those truly fundamental investing style decisions where you go, I'm going to own this for 5 years, to, well, if I can do that over 5 days, well, why can't I do it on every hour? And, sort of you find then a natural rhythm where you will for yourself in that, what time frames you like on the shorter side. But then, as I said, like literally I reckon at least, I think for 30% of people at minimum, hodling is they're not going to have the discipline, or that it's not going to appeal to them enough naturally to actually just stick to hodling.
So just on that, because that's a really interesting point. I know you guys talk about the daily positions and everything else, and it's certainly a more fascinating part of the space, and I guess it's what keeps people so engaged, is the game of that, really. But in terms of like something as boring as tax, how much does that weigh into your decisions in terms of, short-term trading, the gains and the losses and things like that? How much does a tax strategy play into your real net gain strategy, to understand what your positions are relative to your actual position after you've had those obligations to meet?
Oh, that's actually a very, very good question. Personally, I guess what I've done is I describe it as I've set up my own tax affairs in the most efficient way possible, given the way I would most likely like to trade. And then if I obviously make money or lose money outside of that, it won't be the most efficient strategy, but that's what I've done. So essentially what that looks like is I essentially trade as my trading income or losses get classed as revenue. So I avoid going down the capital gains route. So in years where I do really, really well, you could have the issue of paying a lot more tax. And then in years where you might have an actual loss, instead of actually having to wait to earn that back to get the tax benefit, you can actually just claim that off your revenue and get that, tax rebate, which it definitely works. And it definitely works. I guess it depends on if you're 90% investor and 10% trader, you're obviously much better to stick into the capital gains model. You're going to get the discounts and things like that. Whereas if you're and it also depends very frankly as well on if you're receiving external taxation advice. Some tax accounts, even though it's a fair claim, really don't like the concept of you classing yourself as a trader. Not that I've personally seen any issues with that, but that's because I guess the circles I've been in, it's very obvious that the people are traders. They don't have any other source of income outside of trading. So in that case, you definitely are a trader. But yeah, that's what I would advise, Jake. Would be if you find yourself wanting to do X% short term or Y% long term, yeah, you should then pick the taxation structure that suits your split, I guess.
And just to clarify that again, and sorry for jumping in here with so many questions, but would that look something like you establish a company, register a company, and under that company you trade, and that you are an employee of that company? So it's almost a tax pass-through entity where you as the employee and 100% shareholder of the company reap the benefits of any losses by recognizing them in the same financial year or against any gains you might earn personally. But in the same regard, you're paying company tax. You don't get the benefit of long-term capital gains like you might as an individual retail investor.
Yeah.
So the trade, yes, okay. So the in and part of very connected through the company's entity and your personal identity as an employee, but they're separate. So you can use the company to then not be obligated to pay a higher tax rate as an individual on those gains. You'll only be paying the taxable amount of that at the end of the financial year based on the company's earnings.
Correct. And there are other things you can do. So again, it's not taxation advice, but it is something that I've done in the past was, so it was coming towards the end of the tax year and I had a pretty decent gain, but I'd made a investment which, to be honest, I was very dubious about it ever recouping the losses. So it was down, somewhere in the 60% range. So instead of then waiting another year, I just said to the accountant, well, I want it written off to zero. And if it does moon and goes back up 2.5x, I'll have to pay the additional tax the year after. But for me this year, it's more important to get the tax write-off this year than it is to pay additional tax next year. So I just got them to write it to zero. And, in the end, yes, the investment has gone to zero. So, but that's another flexibility that you get by managing your taxation through that type of structure is you can recognise unrealised gains and losses. You can change the timing on them. You can't avoid them, but you can change the timing on them, which can be quite valuable for some people.
I swear this is my last question on this topic, but you keep raising really, really interesting things that will go along with that narrative. Now, say for example, you're just holding stocks, forget like crypto and everything else at the moment. Let's say you're holding CBA stock. And you're down from when you originally purchased at a high, and you're down relative to that. Let's say mid March, late March, and you say, right, I'm down 60%, 30%, whatever it is. I'm going to write that off now, take that loss in my current financial year, and write that off. But you still do like CBA stock. The ATO does look at the software and the buys using the chess system to monitor the types of trades that you're doing. So then if you then come back in and buy CBA in a similar amount on the new tax year and then sit on that for a period of time, they'll look at that position and say, well, this is interesting. This account sold this, has taken this loss, written it off against their tax, and then has gone and repurchased that again. They do sort of look at that loosely, but that's one thing that financial advisors sort of give you is, don't try and play the tax advantage, play a different advantage. Does that ever weigh into crypto investing with how you sort of look at this as well? Like you say, take that 60% loss now, but would you be thinking about buying it again in the future? And do you have any concerns about what the ATO might do in terms of tracking that through KYC?
Yeah, it's a fair question. I mean, the short answer is no. And there's some different answers to that, but one of them would be, you sell in one entity and you have another basically shadow entity or another entity or wallets you don't declare and you don't have any record of what they are. So you basically run parallel books and you could do something like that. But honestly, I don't, because if I buy it and I sell it and then I rebuy it, and then if it goes up, I'm actually still paying. I'm now going to pay it. If then I go, well, I'm going to try to turn it back into a capital gains trade. You can do that, and essentially, it mostly comes down to the time held. So if you then want to claim that it's a capital gains trade, yet you claim that, say, 80% of your trades are short term or as a professional trader, and then you make, some trades that are capital based trades. Essentially, they're going to do some analysis and go, well, the 3 trades you said were capital based trades. The common factor is you've held them for more than 180 days, versus this one that you're saying you want to call a capital gains trade, but you held for 4. Well, that looks like just one of your professional, that looks like one of your short-term professional trades. We're not going to allow that to be put into the capital account. But that's to me, that's not a huge concern, purely from the point of view is that that would only really be found under a full audit, rather than, getting mapped under, electronic, lodgement via e-tax or something like that. The AIs aren't that powerful that they'll discern that level of activity. That's only if you actually get, a full letter and a full audit. And that also just depends on if it looks if there looks like something for them to investigate. If there's nothing for them to investigate, they won't particularly conduct, a forensic level audit unless they feel like there's a significant reason for them to conduct that audit. And, again, most times if it's only one trade and it's only, the difference of your portfolio went up by 3% instead of, 0%, that's not going to come up in their sensitivity screening. So, they would probably look past it. I think the issue is, I guess, if it's a very, very large trade and maybe it's happened unexpectedly, or it's made you make a significant amount of money, and that looks very unusual from your normal income numbers, then you could probably expect a higher probability of getting picked out.
I think a very interesting point in all this is how trading is treated as a business.
Yeah.
I think that's a very interesting point in itself, how you treat that trading portfolio as a business. And this is $100,000 that makes me 10% a month, so I'm earning this much, and that's how it works. That's how I pay my taxes. That's how I treat it. It's just a separate entity, and that's what it is.
Yeah.
Okay, that was interesting talking taxes. Bitman, because tax season is around the corner for us in Australia.
15 days away.
Someone else had a question. Now they put their hand up. Okay, doesn't matter.
I think Flynn wanted to ask if he could use metal detectors to find gold.
Metal detectors to find gold. I don't know. It's not really my area of expertise.
I was going to say, I'm not quite sure I have much expertise in that either, but Bitman, maybe you do, mate. Maybe you've spent time fossicking for gold.
No, I've never done it. And the coronavirus, I doubt you can go out to the beach.
Hey, it'll be easier to find them with coronavirus. Beach will be empty.
Yeah, exactly. There should be less people doing it, right?
Yeah, I guess calculate your downside, which is you might get the virus, and the upside is you can get a lot of gold. So
See, that's a guy that thinks like a trader.
Yeah.
If it makes sense to you, then do it.
There you go. You're on Flynn.
Hi, Flynn.
Flynn is banned from most beaches.
Yeah.
Flynn, sir, how are you?
Who, me?
Yeah, you're on, mate.
I'm online. Now, I was curious to know why your fundamentals were against gold, Grant.
Against?
Yeah.
Oh, mate, I think for me, just the extension of the move wasn't large enough given the size of the action by the Fed. So, I think for me, that concept of, you expect it should move to this or in that way, and if that doesn't happen, you've probably got to say that you've maybe missed something or there's something you're not seeing in it.
Yeah.
There's every reason to expect that there should have been probably a better move. Purely also because the technicals were probably looking pretty reasonable before the fundamental news come out. So you would expect in those times that potentially you get a amplification of the move when both factors are going together. You know, US dollar isn't weak, but it's not strong, so that's has declined as a factor as well. And then I think, you know, as you guys were, you know, talking about, you know, you were bringing up the thing the other week is like, you know, the other numbers in the space are probably okay. Like, you know, there's not a glut of supply. There's not, you know, shortages. Yes, there's apparently, you know, as we said, yes, there's supposedly shortages at the retail space, but I guess ultimately that's just the small holder paying just a bigger premium, and the brokers and the, you know, gold dealerships are just making more money.
Yeah.
You know, it's sort of just a cream spot for them at the moment, where, you know, they can say, look, there are shortages, so we've got to charge you an extra 4 or 5% to get your gold, but, you know, from the smelters and from the sources, they might only be paying extra 1%, so they're really just capturing that themselves, but they're not, you know, it's not dragging the market higher. I think that's the main issue at the moment.
Do you think that Mine Digital would ever put a gold on blockchain on the platform?
Yeah. I mean, we've definitely spoken to there's, you know, 3 projects in Australia that are doing it. 2 are live. One's very shortly from going live. Maybe not everyone's aware. The largest one that launched, has been live, is from the Perth Mint. And if you live in Western Australia, it's been over the front page of the newspaper. But on the East Coast, it's not got as much interest. And that's basically the Perth Mint bought $200 million worth, I think, of illegal gold. They bought it from a warlord from PNG, which yeah, it's obviously not a good thing. So the Mint might be in a bit of strife, and something like running a crypto project on the side is probably not real, you know, positive for their publicity. So we'll see. It'll be interesting to see how that plays out. But mate, you're definitely keen to. The one that's probably launching is something where we know the guys who have launched it or are planning to launch it, and yeah, it seems like a credible substitute.
I think even this goes back to the same thing we were talking about initially. Even gold, you never want to be buying a FOMO pump. That's something you never want to do. Once something pumps, you shouldn't be thinking, did I miss it? Is it going to move? That's not going to happen. You need to just chill. And I mean, if you got into the gold trade early, good on you, but you shouldn't be looking to buy it at a high, because it's a very bad risk reward ratio. It's just not. Fundamentals in crypto. Yeah, that's what we're going to talk about next, Bradley. Okay, Flynn, let me get you off. Okay, so Bradley's asking a question, and I think it leads into the final part of what I wanted to talk about today is moonbags. So, I mean, in terms of fundamentals in crypto, now forgetting about technicals, what do you look for when you look at fundamentals of a crypto project? Grant or Bitman, one of you can start.
Yeah, I'll go first.
Yeah.
Well, I think there's probably a few factors at the moment that have, you know, proven to be pretty reasonable or ideas to look at. So you probably throw away everything that worked in 2017 is probably your first start. You know, is the white paper good? Is the team supposedly got fake, you know, accounts from Google and all that type of stuff? Definitely gone away. Pre-mainnet launch still seems to be a thing that gets people interested. You know, and obviously listing on certain exchanges as well still seems to be two, you know, external fundamental factors that you can be the sort of the average person and have maybe not as good as information as the insiders, but you can sort of at least, you know, you can still access that information. Crypto definitely, I think, as we saw, you know, definitely goes through fads. So, you know, the DeFi fad at the moment would be something I'd tell people to be doing your research on. You know, there's set protocol, which the tokens keeps coming out very shortly. You know, it's been touted and it's getting very, you know, good publicity. We had Band Protocol, you know, a couple of weeks back, and then you know, before that you had, you know, Rune, an Australian project. Thorchain's the project, Rune's the token. Again, there sort of was some really good crypto Twitter chatter about it and interested about 6 cents. Today it printed 28. So that's a nice moon bag there. I mean, I think after SNX mooned, it got people's attention on DeFi. So I think the other thing, I'd recommend in it is understand sort of what's the fad in crypto. So I remember when IoT plays were a fad, and we had, complete vaporware in China rallying like 30x, and everyone was about, blockchain, IOT's the killer app for blockchain. And then they all failed. And now DeFi is the killer app for Ethereum. And, we'll keep going around in that. I think in that things will keep being popular. And that's a traditional remark as well. Stocks do that all the time. You think about it, people will be like, oil producers are hot at the moment. So everyone all of a sudden starts pumping oil-related companies, things like that. So that's, I think, the three broad things you can do. Other than that, I mean, unless you're an actual computer scientist or have a very good technical capability, let's be honest, you're going to have a very hard time assessing the technical claims of any of these projects. And some of them, even they will make the claim, and you'll get people who go, yeah, well, theoretical, that's a fine solution, but no one's
doesn't work
at all. So
yeah,
it doesn't work either. So I think the fundamental side is obviously very tricky, but you can find some nice reasons where the fundamentals line up with the technicals, like something like an OMG, where the fundamental news happened and it started to look like it's turning, and then it broke, recent recent resistances, and then it turned into a very nice trade. But did I buy it? Have you bought the low on it purely on a fundamental point of view? No, because you didn't know anything more. They hadn't really released a serious update for 12 months. So, the technical would just have said, you should have stayed out. And then when the fundamental kicked in and it dragged the technical around, it's probably the best, they're the best trades, but they're not always going to happen. That's a rarity.
Okay. Bitman, do you look at any fundamental? I mean, when you take a trade, or what sort of fundamentals do you look at?
Hey, so this is my weak side, but I think I do have something to share. So I'm not a good fundamental investor, and when it comes to fundamentals, I do not want to divert my attention from the charts. And at this point, I become more of a learner. So I mean, I publicly it's important to kind of accept that there are things you're good at, and there's things where you're not good at. So I'm not smart enough to know if something is a scam or it's a legit project. And therefore, I kind of what I like to do is I have friends who are deeply into these projects, and they kind of it's just like Grant, right? They're geniuses, and they know their thing. And I mean, sometimes I don't understand what they're talking about because I'm not so deep into the tech. But when I can see that somebody is kind of passionate about it and they can more or less make sense to me, projects like ENJ or the Chili's token. I like to look at some independent researches and just read them. And I think this is what's going to be beneficial for most people out there. So listen to a number of parties. If Grant is talking about a token, listen to Omar about that token. Listen to somebody else that's an expert, or that knows what the project is about, and after that, make your own independent decision. And at the end of the day, markets operate in cycles. So no matter how good, for example, Cardano was in 2018, it still fell 90%, and that's because markets are going to operate in cycle. At the end of the day, Bitcoin and Ethereum act as indexes for you to understand where the market is going. So if you're kind of investing in a $30-40 million market cap coin that's kind of listed out there, no matter how good it is as a project, I still like to look at the market cycle and whether it's a good time to invest, because in 2 or 3 months, a lot of things are not going to change. But if the market cycle is kind of in your favor, you can easily 2x or 3x that coin, which is what happened with the H-bar, ENJ over the last 2 to 3 months. So just looking at that really helps, to be honest. And of course, listening to guys like you and knowing your opinion. So I get my fundamental side from that.
And there's two. Sorry, I was just going to say, for listeners out, there's two really fairly priced research subscriptions on the fundamental side, which I really think if you can afford it, it's worth it. So a new one is called the Defiant. So it focuses all on DeFi. The guys who write that are absolutely brilliant. Some of probably like top 5 minds in DeFi. And then more generalist is Delphi Digital. Again, the guys there do really, really good research. You can sort of pay for different levels of subscription. Like with COVID, though, recently they did, a free trial and things like that. And I think, if that's something you want to improve yourself on, just follow those guys. You can follow them on Twitter even, still get really, really good quality information out of them. But if you can afford, I think the Defiant was maybe $100 Aussie for a 12-month subscription, which obviously I think if you're going to take this seriously, if you can't afford $100, you're probably in the wrong game. So you got to, it's worthwhile that education. So yeah, they're the 2 external guys I'd say I really would recommend people to check out.
2 interesting things both of you indicated when answering the question about fundamentals is that you would look at the technicals first and let the fundamentals support your technical analysis rather than the other way around. You're not waiting for the news to buy. You're looking for a setup.
Technically.
Yeah. You're looking at a technical setup and then you're letting the fundamental further enforce your opinion. The other thing that I noticed is that both of you are referring to predicting sentiments before it happens. And that's what you want to capitalize on. Is you want to figure out, okay, everybody's going to be excited on Ethereum next week.
Yeah.
You want to be the guy that figures that out before everybody is saying Ethereum is bullish. Because once everybody says that information, it's out there. It's public knowledge. It's already priced.
And that's exactly what Gary was talking about last Whisky and Wicks. He really went on about that he thinks it's a really big thing, that if you're relying purely on all the information you're using is just what's 100% readily available, you're probably going to have a hard time.
Yeah, because it's priced in.
Yeah,
like this, you have to accept that there's a lot of smarters. I mean, doing the bare minimum in this space to at least follow up with the news, and you can't capitalize on information that is already public. That's just not how it works. But I think that's another interesting point: is trying to figure out sentiment cycles before they happen, which is DeFi, like you said. Right now, DeFi is going through.
Yeah.
One I want to talk to you about, Bitman, is Link. Why are you so bullish on Link?
So one of my close friends is Chainlink junkie, and you know him from Twitter. He's a huge Chainlink fan as well.
I actually reached out to him. I asked him to come on this panel. He told me he said he'll come at a later time. Yeah, that's what he told me. He's like, I'll do it soon, but not right now because I'm just doing some things.
Yeah, he was telling me that he didn't see the message at first, but he saw it afterwards when I retweeted your tweet, and then he saw, oh, okay, I want to go on the podcast as well. But anyways, if we talk about Link, so I started liking Link because it's one of those few coins that's making a new all-time high. It made one last year. It made one this year when Bitcoin was at 10K. And at times, if you notice carefully, it kind of decouples from the rest of the market and can go on its own bull run. So from the technical standpoint, that's what I liked about Link. But from a fundamental standpoint, look, I'm not smart, but I know they have tons of partnerships and with big companies, and they're looking to do big things. I mean, Junkie tries to explain it to me, and I can kind of catch the drift about what he's talking about, and it's really revolutionary. I look at the sort of awards and what they're doing. How long the project's been out there, and Link is just something I found really, maybe it's a bias, but I think it's just amazing to me. And I started buying it at 1.6. I tweeted it as well. In March, I said buy Link at $1.6, and I started buying in dollar cost averaging because I wasn't sure where the bottom is, but I got a decent average entry at $2.5 now. Currently it's trading at $4, and I haven't sold any of it because I don't think I'm selling anything until it goes to at least 2 digits, right? At least $10. And I think every single time we have a bull cycle for Link, it shoots up from being around 10th to 15th on coin market cap in terms of rankings. It can go all the way up to top 7 and top 6. and it happened twice. And I noticed when that happens, at that point, you know that Link is gonna, that's the high for Link, and at that point, you can kind of exit your investment and wait for the next cycle. So I just love playing with the coin in general. I think it's been something which I've been monitoring, and I think I've found my edge when it comes to trading it and investing in it. So yeah, that's why I love Link.
Personally, my biggest draw to Link, the reason I am bullish on Link is just because try and talk to anybody that actually follows the project. And it's what you said earlier, Bitman, about, and even you, Grant, about the passion they have. Like, you try to talk to someone who's into Chainlink and they have a similar passion to what Bitcoiners have towards Bitcoin, the way they talk about it, the way their community is so tight around it, no matter how I look at it, at the end of the day, there will always be people holding Link. And if there's a community that is always willing to buy it, it's a good investment. It's not going to go to zero.
Yeah, and if you take a trade on Twitter, if you just take a trade and you think Link is going down for maybe 10%, you want to take a short, you have to leave a message in the brackets. I'm just shorting for now. I still love Link, because all these passionate people are gonna, they're gonna screw you up in the comment section if you don't make sure, and I love the community. So like you said, you talk to anybody who actually follows the project, they really love it, and that's basically Junkie and a lot of guys out there that really like it. So I'm just kind of learning from them, and I think it makes sense to me.
Yeah, I share an office with a Link Marine every day, so I'm well versed on the community aspect.
Yeah, I get told off every time I say I'm shorting it.
Yeah. But it is an interesting one, right? It has been a great mixture of the technicals and the fundamentals, because it's sort of seeing that, while things were a bit slow and there weren't many, partnership announcements and all that type of thing, it obviously struggled, and then a lot of the good news started turning around, and then the market started turning around, and obviously it did that moonshot. So I think for a lot of people out there, it's been a good story, and one of the, I guess probably crypto in outside of this year really hasn't had that many great stories from 2019, 2018, whereas it's one of those. So it certainly captures everyone's imagination that you can still have these projects and they can still moon sort of regardless, even if Bitcoin's not mooning as well.
Another interesting point on the fundamentals as well. I saw that tweet today about Chainlink being called successful startup or something by the World Economic Forum or something like that. But then I saw Bitman's response on that tweet, and his question was, how many startups get selected every year? And that's the question you actually need to ask. It's not the World Economic Forum said Chainlink, that means it's going to moon. You need to dig deeper than the base headline of the article. You need to go, okay, so what's happening under that? What does fundamental mean? What does it? So I quite like that comment, Bitman, but when I said it to the team, I got told off for being a buzzkill.
Yeah, bro. Definitely, right? Everybody. People can be passionate, and that's fine. But when you read news, you kind of got to dig down into how many companies kind of got the award. I remember the tweet, and it was that Google, I think Amazon, every single one of these big companies have gotten this award in the past when they were a small project. And then the first question I wanted to ask is, are there any companies that received the award that failed? And if so, how many? Right? And then somebody commented, there's about dozens of companies that get it every single year. And at that point I was like, okay, so this is not something that I would consider fundamentally a good thing, because a lot of projects can receive it, but it's still something. And at that point you can assign a level of importance to it. How much does this really matter, or if it's just kind of a buzz, and to me it was more like a buzz. It's a good thing, but it's not something that's going to define whether this project's going to be successful. So yeah, that's what it was.
That's definitely how you need to be looking at it. You can't just FOMO into things. Again, FOMOing into things for no reason. You need to actually be aware of what a number means. Even what does top mean? What does best mean? What does headlines are headlines. They're there to sell articles. But it's definitely, it's definitely a good thing that Chainlink got that award. I don't think any other crypto projects have. So it's definitely a very good thing. I think it was Chainlink and Lightning Labs that from the crypto world that actually got into it. So that's,
Yeah.
from my perspective, to put Chainlink and Lightning Labs together, that to me is a very high validation point for Chainlink. But it's good to know they are actually doing what they're saying they're doing. They're actually living up to their promises. They're doing their partnerships. That all instills faith in you that somebody's doing the due diligence and that eventually this company is going to exist and somebody's working. It's not just a fake front. It's not a pump and dump. It's not.
Yeah, definitely it does give validation on that point. But it's not necessarily a buy signal, but it's more of a confirmation that this is a project that could potentially do well, right? So once again, I would go back to the charts, and if even though Link might be the next big thing, that doesn't mean it cannot fall to $2 in the next few weeks if Bitcoin goes down. It is going to do that, and at that point, a lot of people who call themselves the Link Marines, and when their investment kind of goes down 50%, they actually want to exit, and they think things are not going to work out when it's simply a market cycle. So it is important to understand that news events are great forms of validation, and all these things are good. But at the end of the day, you want to. It's not necessarily a buy signal, and the buy signal comes when you put both technicals and fundamentals together.
That's actually very interesting. Even as a holder, I mean, if I was holding Link today, if I was watching technicals, I thought it was going to drop. If I sell right now and buy it back at 2, I literally double my stack.
Yeah.
I remember once I got into Link at 30 cents and I sold it at 50 cents a couple of years ago. At that point, my mistake was I didn't focus on the fundamentals. I only looked at the technicals, right? And the same way, if you only focus on the fundamentals, it's going to work out in the longer run, maybe a couple of years, but maybe not in the short term. So, if I had been on Twitter back then, probably would have been holding it until now. It would have been something like a 13x, and that's just fascinating. But it's fine because I got into it again, and no regrets. Maybe a small regret that I sold.
Yeah, I mean, I remember my favorite one on that was when B&B was first listed, and it was going like from basically 1 cent to 3 cents or something. And I remember us debating like, oh, geez, that's a good run on that token. Unless this Binance thing really gets popular, geez, that's not a bad place maybe to sell some. Like you've done 3x. That was a great outcome, but obviously. These are the things with these fundamental trades as well. You can't then beat yourself up about it. You can't go, well, fundamentally I thought it was good to buy at 1. It went to 3 and I got out. You made a very nice gain. The fact that it did then like you got 36,000x or whatever. You can't rely on
that. Okay. That's anything. I mean, you said Link, F. What are Ethereum? I mean, Ethereum, we know Ethereum is Ethereum 2.0 coming out. I mean, I guess everyone's just bullish on that coming out.
There's that theory going around. People are buying 32 to stake.
The 32 to stake. That's yeah. I mean, if you look at it today, I mean, it's pretty cheap to buy 32 Ethereums. I mean, it's not compared to when it was 32 grand. It was 32 grand a few years ago.
Yeah. Yeah.
And now, now it's like, what is it now? 32. Yeah, 16.
No, it's around $240, right? So
yeah,
240.
It's only going to cost you around eight grand.
Yeah,
8 grand instead of 32 grand. That's pretty good. I mean,
it's affordable.
Yeah, it's affordable. I mean, you can afford 8 grand stake on Ethereum. I mean, and I think what is a very interesting thing as well about Ethereum being, I've always looked at it that way. I think Ethereum is a very good indicator for how the rest of the alts are going to perform. Because at the end of the day, us Bitcoiners like to call them shitcoins. If you want to call them shitcoins, Ethereum is a shitcoin factory.
Yeah,
that's what whatever coin thing they did, all of them did it thanks to Ethereum. They might have their own chains now, but they all started on Ethereum, and that allows Ethereum to act as a good index for altcoins. If Ethereum runs, altcoins are going to follow. And Ethereum will run after Bitcoin runs, or at least that's how I kind of see it.
I mean, the other time where it's been interesting, again, Ethereum from a fundamental point of view was when EOS got that mega scam pump from that criminal gang in China, and they pushed it all the way up. And then people started to believing that EOS was an ETH killer, and that actually hurt ETH. But that was probably one example where it got both ends of the stick. The market was going down, and it both had negative fundamental news.
Even that statement in itself validates Ethereum, because everyone's trying to be the Ethereum killer. If ETH wasn't a threat to the rest of the projects, none of them would be trying to kill it.
No. Well,
nobody calls.
They'll just try to make $4 billion for themselves, and
that in itself was stupidity at its peak.
Yeah.
$4 billion fundraise. Who raises $4 billion? I mean, I don't. So I have a question from Christopher, and he's saying, is it important to learn on-chain analysis to be a good trader?
Well,
I've never actually looked at it.
There's some maybe value in some of the statistics on the on-chain analysis. I know, for example, one of the guys who I really personally like on his Ethereum calls, he looks at a lot of on-exchange balances versus wallet balances and things like that, and thinks he can. That there's some reasonable signals. Again, he does like a three-way analysis. So he'll combine that analysis with TA with fundamental and trades Ethereum that way. There's probably not too many other coins where that makes as much sense for. Or something like SNX. You could have looked at the statistics of how much was staked, and that was a pretty good predictor as the staking stayed high and the stakers kept restaking and raising their collateral holdings. It was just saying that no one was going to be selling SNX. So that was sort of an interesting, play there. And then so Rune, KNC, have also had the same sort of dynamics come into play. So maybe there in those staking coins, it's a really important factor to look at wallet balances and exchange balances, but probably for other coins, the value of the information is probably a lot less.
Okay. Do you ever look at on-chain analysis, Bitman?
Hey, so I mean, while Grant was speaking, I got a chance to read what it actually is because I didn't know what on-chain analysis was.
Yeah, I've never actually used it. I've never actually used it to trade. I've never used it to determine a trade.
Yeah, but as I read it, it's something that really interests me. I think I just quickly read about the network value to transactions ratio and how it can give you buy and sell signals. So I think after this podcast, I'll probably be reading about it a bit more. So thanks for asking that question. I think I just learned something new. But yeah, I think it's probably pretty cool actually. At the end, it becomes an indicator that can support your analysis, right? And look at things from a different point of view. So yeah, I think I'll be looking into it much more.
That's exactly it. It becomes a new tool for you. I mean, the more you think about all these things, is that at the end of the day, you need to look at your technical setup and be like, okay, this is at the bottom. I want to enter here. And then you can use all these other factors as further support to support your case as to why you think this is going to pump. You can look at the fundamentals, you look at on-chain analysis, you can look at sentiment. But I guess when it comes down to it, as a trader, you need to make sure your technicals are in place. I mean, if the sentiment is good, there's good news coming out, and the chart's at the top, you definitely should not be buying it. I mean, even if you are going to buy it, wait for it to break the top at least, and then buy it. Yeah. Do not buy the top, because you will, most of the time, you will get wrecked. You're safer. I mean, even what Bitman said earlier is that he's happy to let Bitcoin break 10.5 and then he'll buy back his stack, which is true because there's a much higher chance of it falling back than it actually breaking. And statistically, that's how you need to make your decision. It's numbers at the end of the day. It's math. You need to figure out the probability in which one gives you a higher return, and that's how you have to play it.
Yeah, and if you... Yeah, go on, Grant.
Oh, sorry, mate. Yeah, I mean, you also will find in your own... As I said, I think it's why there's one thing I do stress for new traders is definitely come up with risk management rules for yourself very quickly. Like within, the first 3 months, you should develop a set of risk management rules that you're happy to live by. They might not be the textbook ones that you read in in any of the, say, 10 books out there that are seen as the Bibles of risk management. You might alter it slightly, but that's important to get that down pat pretty early. But I'm going to say you're going to struggle for most traders to find out exactly in the first 3 months of how they particularly want to trade. You'll have days where fundamental works, so you think you're going to be a fundamental style trader, and then days where TA works for 5 days in a row, so you're only going to be TA, and then sometimes, you might find some other analysis in between. And so you need to still keep a flexible mind for yourself of how you're going to trade, because it will change, and you'll have different viewpoints at different times. But the risk management part's something you can put in place early on. At least it will give you the best chance at staying in the game long enough to figure that out. So a good example, I was giving one quick example of that. So I don't know if everyone's heard of the very famous fund or hedge fund manager called Jim Simons, runs Renaissance hedge fund in the US. It's probably like top 3 famous hedge funds in existence. For 7 years, even though he was a mathematics professor, he didn't do any quantitative analysis. He used all fundamental analysis and got so frustrated that one day he was, moaning to one of his colleagues, and the colleague, who was just a math professor, not a trader, just said, "Jim, why aren't you using maths and statistics to determine your trades? That's what you believe in. That's what's going to work for you." And they switched the fund to a quantitative fund, and obviously the rest is history. He's a billionaire, and it's probably the most famous quantitative fund in the world. And that was because, he wasn't trading to what he was or what he was good at personally. He was sort of forcing himself to be some style of trader which he thought was better than what else he could have been.
Also very important. I mean, it's viewing trading as a craft and understanding that 2 traders are going to trade the same way. What works for you is not necessarily going to have to work for me. It's just not how it is.
Yeah.
Every one of us will trade in a unique way. And you need to know what your style is, what your indicators are, what works for you, and you need to learn to discipline yourself to stick with it. And that's just how it is. We're not all the same. Textbooks will give you guidelines, but I mean, again, it's what I asked earlier. How much do you risk per trade? There's no solid number that can be applied to everybody. I mean, every trade is different. Every style is different. That's just how it is. That's how it has to be treated.
Yeah, I think so. It comes down to how hard you want to try at the end of the day, because if you start by learning technical analysis and looking at the charts, okay, you got step 1 done, and you still trade. You try to log your trades, and you're still losing money. Okay, now you're missing something. At that point, do you quit, or do you get into risk management and start to look at the boring aspect of trading and include that in your strategy? Once you get past that, maybe you're still FOMOing in and using your emotions. Once again, what do you do? Do you quit because you've lost money, or you start to understand market sentiment and understand the fact that if 80% of the market is bullish, you will almost always make money by shorting, because that's just how it works. The mass majority of people are not supposed to make money, and it's usually the 10 to 20% of traders that have figured it out that make money. So how it depends on your mindset and understanding that it's more of a long-term gain. It's not something, you can have 3 days where you're making losses, and then at the end of the month, you can have a bad weekend at the end of the month, still break profitable, and at the end of the year, 2 or 3x your portfolio. And it can change with mindset. So as someone who used to be a complete trash trader, and now is able to generate income through trading, I really think that it's definitely possible for every single person, and it's not that difficult. Once I look back into hindsight, it was really just a change in mindset one day that no matter what anybody says, I'm going to become a profitable trader, and I'm going to find a way to do it. And then you kind of go into your own direction, find your journey through that, and find strategies that work for you.
I think probably the key takeaway of tonight's talk is that trading can be very, very profitable, but do not look at it as a fun activity. It is work. Just like anything else in life, it's work. You need to give it you need to respect the craft enough. It's time to give it its effort, and you will be profitable. And you can make a lot more money than most people make doing normal jobs. But that's only if you respect it as a craft, and you're not just numbers around and just gambling, hoping that this goes up or that goes down.
Yeah.
Okay. I think, I think we're reaching the end of this. I think I did get that message across. I had a lot of concerns from last week's institutional talk that I thought I was telling retail traders that you all suck. But again, I'm a retail trader. That's not what I meant. What I was trying to say is that most retail traders lose is because they have no idea what trading actually is. They don't understand that it's hard work, and you need to just put in that work. There's no simple way around it. I mean, there is,
and that's why risk management is important. You have to get that screen time. Like as Bitman said, he's gone from X, doing 3 times more hours than what he does now, and that's only because he's improved his craft. It's not because he magically woke up 5 months ago and found the one indicator that worked for him. Because over 5 years he's worked at it every day. Doesn't quit. Doesn't have a break or whatever. It's you do the work.
If you want to hard enough.
Yeah, and at the same time, like any craft, it's incredibly frustrating. There'll be periods where you'll be brilliant, and you look at the famous artists. They would have states where their creativity would know no bounds, and they produce 5 great works in a 3-year period, and then some of them never do anything for 18 years again. And trading can be equivalent of that. Like there are people who literally, you can have years of bad spells in trading, and you either come out or you don't. Is the other thing as well. And that's the other thing, is just because you then do the time doesn't mean you necessarily still make it. It's still, a hard slog.
Yeah, that's exactly how it needs to be looked at. I mean, something interesting I heard the other week is that the most common things you can hear to spot out a failed trader is, number 1, the market is rigged. It's all against you.
Yeah.
Number 2 is trading is easy. Join my group. This is how you tell a failed trader. Is a good trader would never tell you trading is easy. And a good trader knows that the market is not rigged. It's just that most people think it's easy money. And there is no such thing as easy money. There's no shortcut to becoming successful. It's not how things work. If you want it, you need to give it its time and effort. If you don't want it, then you can be like the rest of 80% of people that don't want it.
And that's the other thing. And they don't want it as well, because that's the other thing you find about a lot of those people is the people who oftentimes also say, trading's a mugs game or whatever, you find out they had capital of, say 50 grand, and they were willing to lose $1,000 and figured if they couldn't turn themselves into Warren Buffett with $1,000 stop loss when they had 50 grand potentially they could use. It's like, well, what do you expect's going to happen if you're going to put up such a dismal amount of your capital? I'm not saying it's the quantity, the outright quantity, it's the percent. It's 2% of your overall capital. You're saying is you've got to learn enough lessons out of 2% to become successful. Like, at least you have to be willing to lose 20-25% of your capital to even assess if you're good or reasonable or might even have a chance at it.
You need to think about it as education. I mean, it's like paying for a uni degree. How much you pay for a uni degree?
Yeah.
You flush about 50 grand down the toilet. I mean, just to get the education. It's the same thing. You need to lose, and when you lose, it's just lessons you learn. But as long as you're learning lessons, and this is why you shouldn't blindly follow anybody. If somebody tells you do something, you need to also have your own reasons as a trader, because when you fail, you learn a lesson. But if you're just blindly following everybody on Twitter and going, okay, he said long, so I'm longing, then when it loses, what did you really learn? Not to listen to that person. But it's also not that person's fault, because he's wrong sometimes and he's right sometimes. I mean, that's how trading works. It's tricky, but I mean, if you're willing to give it its time, I mean, it can be very, very profitable. That's what it is. It's a business. It needs to be given its time. You need to take it seriously. It's not a joke. It's not get rich overnight, quick scheme. It's a craft.
And one point I would add is that I think that we made it sound like it's really tough thing to learn, but at the end of the day, if you have a hankering for numbers and you kind of like the decisiveness of the market, I feel that trading is the only industry where there's always a correct answer, and that's the market itself. And that's what kept drawing me to it, because at the end of the trade, I always know if I'm wrong or right. In high school, my weakest subject was always English, because the way I interpreted Shakespeare or a novel was so different to how my teacher always interpreted it, and he or she would just give me a low score, and basically it's subjective stuff. But whenever it came to numbers, there was always one answer, and it's what kind of gets me going into trading. If you're right, you're going to make money. If you're wrong, then you get punished and you come back stronger next time. So people my age are not making any money whatsoever, but I just love the concept of crypto and trading so much that even after losing money as a teenager, I started when I was 14 with stocks and started crypto when I was 17. So even after losing money initially in stocks, and then the whole crash in 2018, it just kind of you put it off for 2 weeks and you kind of get over the losses, but at the end of the day, you come back to trading and you want to make yourself better at it because it's so decisive, and you kind of just love it for what it is. So if you have that kind of passion, it's not going to be difficult. It's going to be more like automatic. You're looking for resources. You're looking for that way that you can learn it and get to the other side, and you just don't stop until you get to it. And if it's something that doesn't get you excited, it's forced on you, then I would recommend you do something else, right? Because not everybody is meant to be a trader. You are supposed to do what you're best at. Like I said at the start, I'm not a fundamentalist, and it's not something that I'm an expert at. So I listen to expert views when it comes to fundamentally assessing projects. But when it comes to numbers, I don't listen to anyone but myself. And I look at other people's analysis, I kind of weigh it in, but at the end of the day, I'm confident enough to make my own decisions. So that's trading for me. And I live in Hong Kong, but I often stay awake until 5 a.m. just to look at the U.S. market and look at Bitcoin and set alerts. And if it's something that makes you stay awake the entire day, and you love it so much, then it's definitely worth pursuing. So think of it from that standpoint, and take it seriously, but at the same time have fun doing it because you truly want to be here and you truly want to excel at it. So that's how I see it, and I just love it. Just waking up to crypto every single day.
I think that's really great sentiment. And I think you touched on one point, which I think I just really like to stress to people as well, and that is, you might even start out at it and think that you want to do it. There's something else about trading which is really unique, and that is one of the reasons why it's really hard. It's probably the only thing in the world that you can do where you're directly involved with. There is no skill level. There's no noobs exchange. There's no intermediate exchange. There's no expert exchange like there is in sport or in playing music or other things, right? There's not. It's everyone trades the same instruments. If you want to trade Apple stock, you're trading against Steve Jobs, against Renaissance, against the tech bros out of San Francisco. Like that's the market. It's made up of everyone. And for some people, when they look at it that way, they get really scared and go, well, how can I win? Well, everyone has, you still can do that. And that's, I think for some people that becomes a real driving force to be involved in trading and markets, is the fact that it's such a hyper competitive pursuit, but it's competitive within yourself as well. So it's whilst those people are involved, it's not that you're competing against them directly, but from that point of view, I think if you're an intellectually curious person, I think it's a really terrific pursuit, even if you do it from an intellectual point of view. Like, you might chart for 6 months before you decide to trade or things like that. But yeah, I think if you're that type of person, you get very excited by the challenge pretty quickly, and you probably feel it immediately. If you're someone who probably you're finding it really tiresome from the get-go and it doesn't improve, well, it's probably give it a miss.
Yeah, that's a very good note to close on. Okay. That's the end of the show for today, guys. It's pretty fun having you. Thanks for coming on, Bitman. Thanks, Grant. Appreciate both your presence.
Thanks for having me, man. I mean, you really tied the podcast together, Omar, and Grant, you're a genius from what I can see.
Thank you, mate.
No, thanks a lot for coming on, man. I'll post a recording once it's out.
Yeah.
But yeah, and thanks everyone.
Episode.
Yeah, I really like